Today, 6.5% of banks are tightening their lending standards, as we can see from this chart. But this number has come down significantly from the 51% reading we saw in 2023. In other words, even though some banks are tightening, the vast majority are not, which means overall lending conditions still remain favorable. If we put credit spreads on top of this chart, we see a very close relationship between these two lines. In fact, shifts in bank lending standards have often preceded major moves in credit spreads. So with fewer banks tightening today, credit availability appears to be improving. And if that's the case, then any move higher in credit spreads is likely to remain limited and short-lived for now. Of course, if banks start significantly tightening their lending standards again, we'll be quick to readjust our strategy. But that's not what the data is showing right now. In fact, if we zoom in and replace credit spreads with Bitcoin's yearly returns, we see something even more interesting. When the share of banks tightening lending standards is rising, it coincides with a weak performance on Bitcoin. And when that line is falling, it tends to create a supportive environment for Bitcoin. Since late 2023, lending standards have been easing, signaling that credit conditions continue to favor risk assets like Bitcoin. And as long as that remains the case, we remain constructive on Bitcoin, despite the potential for more short-term volatility. If you have not taken advantage of it, do not miss the massive discount that we're currently doing on our service for Black Friday. You'll get access to each and every one of the trades that we share with our clients. We pride ourselves on being extremely transparent regarding our track record of our winning and losing trades that you can check out on our homepage for free. We trade stocks, crypto, and commodities. This is our biggest discount of the year, so make sure you take advantage of it using the link in the description below.